right, a new filing from GameStop. The company says that it may offer and sell an additional 75 million shares of Class A stock. That's an amendment from an earlier filing where they had planned to sell 45 million shares. That was back in the middle of May. That stock was up 33% in the pre-market when we started at 6 a.m. It is now down by about 8%. So we've seen a big swing from $65 down to about 42. But, of course, that 42 is very highly elevated, still up 82% on the 1 week. Joining us right now to talk about lots of things surrounding this is Amy Lynch. She's the former chief compliance officer of eTrade Advisory, which is a division of eTrade Financial, now Frontline Compliance founder and president. And Amy, there are so many questions people have been asking about this week. We are expecting Roaring Kitty, Keith Gill, to do a YouTube video that he releases later today. I think noon Eastern time is when it's expected. There has been talk at this point of the potential to kick him off eTrade, potentially banning him from the platform. What would be the cause for that? What would be the rationale? What is eTrade thinking through at this point?
Well, good morning, Becky. It's a pleasure to be on your show today. And for a broker-dealer to kick off a customer from its platform, they can do it really for any reason. If you look at most brokerage contracts, there is a clause that says that they can restrict an account or close an account at their sole discretion. So we saw this actually happen the last time around in 2021 when several brokerages did the same thing. So they very well could, but typically they do not. And
but they banned people last time around for what cause?
They were not meeting margin calls. There were issues with not being able to fulfill their contract obligations, which is definitely a reason why they could do that. This time around, we don't know if he has fulfilled his contract obligations or not. We have no evidence to the contrary. So if they were to look for a reason, it could be due to suspicious activity within the account. But again, that's just suspected at this point. It's early days in this new 2.0 meme stock frenzy that we're dealing with right now.
I mean, is there a reason to think that there is suspect activity here? And is there the potential for a backlash from retail investors if they ban him without having any proof of anything?
Absolutely. There is the risk of backlash. And eTrade and other online brokerages really benefited from the meme stock frenzy of 2021. So you would think, why would they want to lose all of that new business? So that is a strong consideration here. But also, I know that eTrade and Morgan Stanley both have some very bright legal and compliance people. They will be watching Roaring Kitty and Keith Gill at 12 noon today, and they will need to make some decisions.
So what would be something he would say in a video that would cause them to ban him? What would what would reach their radar screen as things that would be potentially problematic for eTrade?
Well, it does get down to what he says or what he shows. He could be showing videos as well as speaking within his presentation. If he gives any inkling that he is working with a group of people or colluding in any way, or has been in discussions in a private context in any way with other people, that could be suspicious in the sense that he's being in contact with individuals that may have inside information. I strongly doubt that at this point, but it's possible because we don't know, where he's really coming from with his information at this point, other than his own research.
Right. If it's just his own research and he gets on and does what he did back in 2021, is that a problem?
Most likely no. So at this point, he would be acting as a private citizen, investing in his own personal accounts. And as a private citizen and doing his own investments, he can talk about his own book as much as he likes.
I guess the goal is to repeat what was happening in 2021, where there really was a movement, people who followed him because they appreciated his opinion and wanted to jump on board with it.
That's right. And now he has an even bigger following. This is his second time around. He knows how to play the game, and he's played it very well. Actually, I don't know if anyone's talked about this before, but early in his career, he was a chief compliance officer. And he also was a registered rep at a broker-dealer. So he knows the system, he knows the rules, and he knows how to operate just at the edge of those rules.
Were you surprised by the size of the position that's been shown?
Absolutely. I don't think anyone expected him to put that kind of money on the line.
Yeah, I think that is maybe underselling the whole thing. We're watching GameStop shares today. 43.31 is the last trade, but we have seen some pretty big swings. Amy, I want to thank you for joining us today.